What up, traders? What up? My name is Emmanuel, and today's Thursday, May 29th, and we are here again to drop a huge banger. What is the banger about? Trading gold features on Top Step, baby. And what strategy do we use? Orderblocks and the 200 Ema. I think we should end the video there, but let's go into details, bro. Let's go into details. Big facts. All right, so we're talking about gold features on Top Step, right? Top Step is just the broker that I use, which is a prop firm. I use their broker, Top Step X. It really doesn't matter what broker you use or what prop firm you use. I just strictly like Top Step. I've been trading them for like a year. The rules, one, because they really keep us disciplined. And two, I really just like how there's so much opportunity for any trader or anyone who's trying to be a profitable trader or just trying to be a trader. They have courses for you to learn, like in a sense of like, you can trade live with them, you can trade, you can watch them trade, you can hear like their speeches, whatever you want to do. I really feel like Top Step offers us a really strong advantage in comparison to all the other brokers and all the other things that are out there for us to attain and use, right? But gold. Come on, bro. Like, if we're really honest, how long have we been trading gold? I really think we've been trading gold since the beginning of time. So I feel like since we've been trading this since the beginning of time, we're just going to forever continue to trade it. That's reasoning enough for me to continue trading it because it's one of the longest traded assets that has been trading not only just in the American government, but any other government in the world. You will forever hear stories about gold, even in ancient times. And even if there isn't any more to give out, the value of it will still increase and decrease. And as long as it goes up or down, we could still trade and make money from it. So that is why we trade in gold, and I just want to leave that there as a small little, just a little key little factor for us to know why we trade gold. Because again, it's just, to be honest, bro, gold is a beast, bro. It moves clean, it respects levels, and it's just one of the best instruments to trade. Let me not, I'm over here glazing the mess out of gold, but bro, if we're really honest, bro, gold is like, she's very good to me. And because she's good to me, I have to be good to her and shout her out. All right, let's get into something a little bit more in tune with what we must be talking about, right? So we're talking about order blocks and the 200 EMA. Order blocks are just really support and resistance. I just like to call them order blocks because to me, I feel like it creates a sense of urgency, I guess, in my head, or I guess a sense of value. Or Emmanuel, make sure you pay attention to this zone. It's not just a support zone, it's an order block zone. Understand what it is. Order blocks are just where you see price hits, and if it's a support order block, then it's where price can go down to, and we can ultimately understand that if price comes to this zone, it will bounce back up into the ranging area, wherever it was coming down from. Resistance order block, we understand that whenever price hits this point, sellers step into the market and they hurry up and push price down, right? It's just a clear inverse reaction, and it's very fair, very straight to the point. What's the difference between order blocks and support and resistance? Bro, that's a great question. I'm not even going to lie to you. Order blocks, I said that order blocks are very similar to support and resistance, but that's just for us to understand that the similarities between the two. They're not just random support and resistance zones. We're looking for consolidation before impulse moves, stop hunts, and volume imbalances. When I say volume imbalances, whenever you see, look at this candle right here, right? I'm just going to circle it very slowly. We see how the body of the candle is above this zone, this red box, but we see price clearly came down and swung into that zone. Volume imbalance, meaning that there was a whole bunch of, look at the volume candle, it's a whole bunch of sellers stepped into the market, but price was not able to break that zone, or wasn't even able to hold and stay within that zone. That lets us know that although the selling pressure was extremely high, there has to be passive buying or orders that are absorbing that momentum, right? That momentum was put to a halt. Why was it put to a halt? Well, there must be passive buyers that are sitting underneath that zone that are absorbing it. Hence, an order block. They block the orders from pushing the price down. That's all. That's the only difference. That's why I call them an order block. They just have to have very clear-cut, strong reactions and inverse movements that make price to stop or halt or hesitate in doing whatever it was doing before. That's just what an order block is, different from a support and resistance. Again, in my terms, again, everyone's definitions are different. Everyone can have different strategies. Please, I just want to throw that disclaimer out there because can't nobody be right or wrong. This is what's been helping me be profitable. And if it's working for me, you might want to try it. It might work for you. That's perfectly fine, right? The next thing we're going to talk about is the 200 EMA. And all I just want to EMA just means exponential moving average. It's just the moving average. It shows you the overall direction and movement of price, right? For that, whatever, for wherever you are looking at the EMA. As price goes up, it pulls the EMA upwards, and as price goes down, it pushes the EMA down with it. 200 EMA, we just want to know is whenever we see the white line, if price is above the 200 EMA, we're looking for longs. I'm looking to buy. I'm looking to buy off of my order block zone. Wherever I see a order block, if my price is above it and the 200 EMA is right underneath it, I want to buy. I want to trade away from the EMA. The EMA is underneath, order block is right here, price is right here. I want to buy right here and expect price to move upward. Why? Because I have support underneath and the EMA, which is the moving average. The moving average shows us where the price is going. So we should expect price to continue moving away from the moving average. Keeping that in mind, let's look at what we did today, right? Right here, I just want to mark it out very quickly just so that we can see. Right here, we see this order block. We see I have this bearish order block, which is this red box that we have right here. And I drug it out as we saw earlier. I just drug it out. This was what we had originally had it earlier, marked here, and we just drug it to the left. And again, I'm going to grab it right here, and I'm just going to drag it again. The reason why we know that this is an order block is because we could see when a price came here at this touch, it had a reaction. Look at the very next candle. It had another reaction. Let's circle over again to the beginning of this day, market open. We had a reaction which caused us to have a huge sell movement. Now again, I know you guys are like, oh, Emmanuel, the 200 EMA is right there with the price and it's underneath, the price is on top of it. But we have to also understand what a break and retest is. Price is going to try to sweep. Again, this is what we just said. What are we looking for? We're looking for stop hunts, volume imbalances, and we're looking for liquidity zones. So with this, we understand that if people, again, we can just circle back over, right? Let's say I was trading in the Asian session, right? I was trading around 4 o'clock, London session, it was around 4 o'clock in the morning. And let's say I was in sales off of this zone with my stop loss right here, right? I'm in this trade currently. As the market starts to open, most of us as traders, we like to bring our stop losses down. So to cover our butts so that we don't lose any money for the day, especially if we've been winning the whole entire day. A lot of people would have put their stop losses on top of this zone or inside of that order block, meaning that if price came back into that order block, we know that we might be incorrect. This clearly looks like stop loss hunts. It looked like price intentionally wanted to go down. It wanted to press down, but it just did not have enough volume and enough sell power to overtake this bearish order block, this red box, this red rectangle. So what did it do? It waited until market open of the New York session, and when New York session came in, when all these new buyers and sellers stepped into the market, now gold was ready to execute its move. It waited until it retapped into that zone. Now you could have placed your limit orders on that zone, and you could have even went lightly on the position, 1 contract, 2 contracts, and we would have rode it down until it broke this order block zone, this bottom one, the one below it. This trade would have been executed off of this entry right here. It could have been anywhere. We would have went into a smaller time frame, the 1 minute, and we could have zoomed out and found an exact entry as to where or when we would have entered, right? A good entry you could have entered in would have been here. Why? Because we see that price is underneath the top of order block zone.
What? Bro, what are you talking about, man?
Which is this little line right here. And now we also see that the 200 EMA is also on top of price. So if our intention or the main idea of our strategy is to first pinpoint where price is, locate and see if we can find any order blocks that have been forming. And then on top of that, now we are looking to see where the 200 EMA is in respect to where price is. If price is underneath the 200 EMA and we are underneath an order block, or we are in an order block, then it is fair to say that we should be good to sell, right? And the same is for the inverse reaction. Let's not overcomplicate it. I just want you guys to understand that this right here is my bread and butter. All I do is simply, first, again, show me what it's doing. We're in sells for the day or we're in buys for the day. After I see what the daily bias is, from that point on, I'm just waiting for an order block to form or to see if price touches a previous order block. And I'm waiting to see if I can have a confluence with my 200 EMA. And if I can, then I'm good to go on a trade. If I'm not, then I'll wait until a later opportunity presents itself. Again, my trade that we made yesterday was this trade. It was just beautiful. It's set up perfectly. I'm talking about EMA, order block, on top of a bullish order block, oh, we were good to sell. Price couldn't even tap into it too far deep. Like we could have had a stop loss of 0.09 and we would have been good. But that's still good. Like a 22 pip stop loss or a 20 pip stop loss, risking one contract, that's $200. Boy, we are eating. And the full move was 80 pips. Oh, please. The full move, we went for 80 pips. Stop. That's a lot of money. Let's not even do all that. I just wanted to show you guys that our strategy worked. It worked yesterday. We had a trade today off of this zone. And we're just going to wait, and we're going to wait until London session tonight, Asian session and London session of tonight to step back into the market to see if we have another opportunity or if another opportunity presents itself. And if so, if we're patient, then we should find an entry that sets itself up for us and we should be able to execute. No questions asked. But again, I just wanted to drop this quick little banger just to explain to you guys what strategy I've been using recently, why you guys see me draw these boxes, and what the white line is on my screen every single day. And I want you guys to join us live on Twitch at Really Manuel K at Twitch. Join us, bro. We're gonna be trading live. You guys can be watching the trades together set up, and we'll be executing them together if you guys want. Or if not, you guys could just watch me see if I have a winning strategy. And if you guys see that there's a winning strategy, you guys are free to adapt. Again, I go over through all of our trades. I will go through my trading journal, all of our charts, just to show us so that you guys can know that trading is accessible to everyone and to anyone. You just have to put in the work. And if you're willing to put in the work, then God will reward you no matter the cost. And this is again step one of me putting in the work. And we all gonna eat, bro. We're on the road to make 100,000 traders by the end. I say 2 years, but I think God might be able to do it by the end of the year. And y'all should just be part of it. For real, sub up, follow. But at the end of the day, no one should be able to say that they didn't know how to trade or they didn't know that trading was available to them. I didn't know it was available to me. I thought I had to go to college to go learn this. I thought I had to go study at all these big finance companies to establish myself, but that's not the truth. That's not the truth. Trading is here. It is available to anyone. You just gotta be able to check yourself, be patient, and we gonna get this work in. All right, I'll see y'all again tonight for stream, but we're gonna post another video another day. Boom.